Good morning, everybody. Welcome to Phoenix Trading Strategies, where strategic knowledge and information allows you to trade successfully. Today is May 2nd, 2016. It is 9:05 a.m. Eastern Time. On my clock, you see 6:05 because I am on Pacific Time. Before we continue, let's go to the disclaimer. For those of you that are here for the first time, welcome, and for those of you that are back, welcome back. Okay. Disclaimer. Future stocks and spot currency trading have large potential rewards, but also large potential risk. You must be aware of the risk and be willing to accept them in order to invest in future stocks and Forex markets. Don't trade with money you can't afford to lose. This presentation or website is neither a solicitation or an offer to buy, sell future stocks or Forex. The representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this presentation or website. Past performance of indicators or methodology are not necessarily indicative of future results. Being that said and done, good morning. Let's take a look at the calendar. So it's a bank holiday in China. Go figure. Or at least it was yesterday. Today it's a bank holiday in the UK. Great, lovely. Had quite a bit of news come out of the euro, Swiss franc. Numbers came out pretty decent for PMI. Yeah, not bad. Almost as expected. Right now, within the next 20 minutes, Royal Bank of Canada manufacturing PMI will come out, and then you have U.S. final manufacturing PMI. And then we have Drago speaking today for the euro. I wonder what great news he has to say. We also have ISM manufacturing PMI for the U.S. at 10 a.m. Eastern. Construction spending, month-on-month ISM manufacturing prices, and that should be the end of the morning. So not a lot of news, but enough to basically drive the market. So let's see. Let's go to the market. Now I took this trade yesterday, last night, and I got in at 17,689. I actually got in, it was about right here. Now I had called that this was going to go long from 17,680 and I actually posted it on my LinkedIn. If you haven't looked at it, you should look at it once in a while. I will go to my LinkedIn and I will post what I think the market is going to do, giving you guys hours notice in advance of what happened. So I posted it here. And this was, I think it was about 9 p.m. my time, 12 midnight Eastern time. So I posted where I saw they were going to basically take it long in from that point. So if you're not following me on LinkedIn, shame on you. You should be, because once in a blue moon, I will give you a hint. And really, I post it there because I really do it for my clients, primarily so that you guys can actually go and analyze the trade. So right now, from my entry, 7,689, all the way to 17,745, well, you know, that's a good run. Can't really complain about that. Let's see, we do it from here to here, 55 points. It's not bad for an evening trade, and it was very clear. You know, I looked at it on the higher time frames, and to me, when I saw them do this and then form power dots and then continue, this was my trigger. See this indicator right here, and we're going to go over these indicators because I think it's important for me to give you a brief explanation. I know that for some of you it gets old, but for those of you that are new, you know, it may be beneficial. So basically this algorithm that you see here, and let me get the pointer. These are power dots. What do power dots do? Well, they announce three things that happen. They announce when volume, momentum, and liquidity are building up and coming into the market, which equal for you a trade opportunity. But that doesn't necessarily mean the minute they form, go. No, that means analyze. Why? Because you want to make sure. So you could have had a re-entry here after they formed here. See how the power dots ended up curving to the upside this way? Very rarely does this happen, but it does happen. And when it does, you need to pay attention, because what they're doing is that they're using, and I don't really like to use moving averages, but I've started to right now, primarily because I read a thesis that made perfect sense to me. And I'm not going to tell you what it's about because it's not important. But let's just say that I discovered that their algorithms are now, right now, trading with the 50, the 100, and the 200. Now this is a 10-minute, but I don't base my entry off of this. What they're using it as is a mean. And so, as you can see, when my power down algorithm forms, you pay attention. That boy tells you it's going. And it did. And so in this case, you know, if I wanted to, and right now I'd probably be exiting this trade. See, I don't like what this did here. And the reason I don't like it is because, and primarily, because of the fact that it went up, pulled back, and it closed slightly below the point of control. Now these two dashes that you see in this candle, this is a point of control where the buyers prefer to buy and the sellers prefer to sell. So, excuse me, I'm still waking up, just had my coffee. So what does this mean to you? That point of control, that indicator, is what's actually going to make your day when you trade, because you're looking for this trigger. You're looking for this trigger. Now, more likely, you would expect this to come down, but it hasn't, because they did it here, and usually we get 7 candles up once it goes. So I'm expecting this to continue to go long. But when they did it here, see this right here? This is a high-frequency volume candle. When it's magenta like this, that means they threw everything, including the kitchen sink. They basically wanted to go short, which they did, but then they ended up closing the candle above. Why? With bullish volume, or slightly bullish volume. Sometimes yes, sometimes no. The point of control is important here because it's telling you two things. See how it's on top of where the sellers prefer to sell at, the buyers? Normally this point of control should be up here, the green one. So when that happens, what that's telling you is, and when they're doing it right off of power dots, the way they did it here, what that's telling you is that they're not going short anymore. They're done. They've exhausted all their orders to the downside. They've rebalanced, and it's time to bump, to go up, which in actuality is what they did. And you can see they repeat the same principle here, and then from this point, it just went. They came back, retested, but they never closed below this level. This is what is important about this. And this is where you have to pay attention, that they will define a level, and it will be very aggressive. So if they don't close below where this candle ended up closing, then guess what? You're looking for the same trigger all over again. And when they give you that, they can go high, low, so long as they don't come and break this, and then they form power dots around it the way they did here, then you have a trade to the upside, which in actuality is what it is. Now, the beautiful thing about this is that the minute this trend stop, okay, this is a trend stop. This is a trend telling you it's still short, but the minute that it's broken, and they come back and retest, and then it's still bullish, then that means that this thing is going to continue. Now, they really traded this right off the moving averages, which is really unique, but it's, they do it on a quarterly basis, so it's not something that they continuously do. So right now, I'd like to say that we got 3 to 4 months before they change their algorithm and, continue to do nonsense. But I wanted to explain that to you because I thought it was important. So now I'm going to ask you for a minute because I'll be right back. Okay, back to this. So basically, when you see this happen and then they form power dots again right above that level, then even though they went swipe, see how they pulled this, all they were doing was just coming back to retest, but they never ever went below. So what kept me in this trade was the power dots, and this was about midnight my time, so it's about 3 a.m. and then basically just went, never looked back, and right now it's still going. Actually, this went in, this was right before we opened the room, where you could have got the trigger to go back in. It's 17,725 to 17,745, would have been a 20-point trade. Right now it's a little bit on the dangerous side to get in. I wouldn't. To me it looks like it's going to reverse, and it looks like I'm going to exit. But I don't think so, because normally when they do this, they will usually trade away from the next mean. They're using these two, the 100 and the 200, as means. I don't trade moving average crosses. That does not exist here. And we're using them completely different than the way everyone else is using them. Everyone else is using them the wrong way. So, because of that, we look at the market differently. Now, again, this is a sentiment indicator, so this basically just keeps us in the trade, more or less. Once it goes, for instance, the minute I entered, the minute it went bright, then at that point I would have moved my stop loss from break even, and that would have been, and that's all I use it for. Now the volume indicator, that's a whole other monster, and we're going to look at that very shortly, but right now I think that we want to go look at a few trades. And I think that let's take a look at the US yen, because it is strongly correlated with this. So we'll come back to this one. Morning, John. How are you? So what I teach here is completely outside the box. You know, it's what you call, there's a very unique term for it because of what we do. And what it's called is cryptanalysis. Why? Because we're decoding. So here, for instance, the US yen, this one came in, and it's basically, this one usually goes the same direction as the Dow. As you can see, they did the same stupid trade here, excuse me, except they did it with a bearish candle. They closed right above, and then they went. This was tricky. I would have really questioned this, but then it went. And of course, they've been holding back. They pulled, came back down, came down. Then they did the same thing here, went back up, and it's just been a roller coaster. Realistically, this was a trade that you should have been looking for to the upside, and they still have to finish. They still got to come up. So this one is pretty much telling you that they're going to do that exactly. Now, this one didn't really close below it, so this is pretty much giving us an indication of what they're doing. The fact that this one is closing slightly above these 2 points of control is significant. This is an imbalance. If it would have been inverted, where the point of control of the buyers would have been below and the sellers on top, then I'd say we have a clear reversal setting up. But it's not. It says the buyers are still in control, the sellers are in disagreement, and I really don't care what they disagree about, quite honestly, right now. But this trade is going long. So based on that, I can take a position here, know my risk. And if I understand my risk, what's my risk? At this point, if it's at 106.69, I really wouldn't be risking more than here. Let me get the cross lines. Right here. Why here? There's a pivot right there. There's a trend stop right there. As you can see, it stopped. And so we're talking about 15 pips. Actually, less, 14 pips. I really don't like to give away more than 10, to be quite honest with you. If I make a mistake, then you know what? I'm okay with that. you should, any time that you go into a trade, good morning, Albert, you should consider looking, or Alan, you should consider looking at the fact that your risk should be minimal and you should know why you're entering. If you don't, then you have an issue. Now, we're going in late on this trade. We have 1, 2, 3, 4. I'd like to say 5. I'd like to say maybe we got 2 more candles to the upside. So we'll see. And I think they're going to play this right as the rest of the news comes up. But if I'm right, they could go long before they go short. So if they're setting up for the numbers to be negative, they're doing a really bad job of it right now. So I would, in that regard, analyze this very, very carefully. Why? Because this is one of those things that you want to take a look at. Now, the beautiful thing about this algorithm is very simple. That, for instance, the market analyzer, I can change it to adapt to the minutes. So in this case, if it's 10 minutes, I can do that. If I'm on a 10-minute, I just have to change it real quickly. I usually just have 1. Sometimes I put up 2, but I always tell people, look, if you're going to trade, choose 4 or 5 instruments. Don't go beyond that at the beginning because it's too much for you. You're not ready for it. You have to learn to manage what you have before you can basically expand. You know, I have futures markets and I have a lot of Forex pairs here. So I look at it that way because I'm a little bit more experienced in that regard. But as you can see now, we've isolated certain trades that we can look for. For instance, the US CAD. This one's telling us to look at the US CAD, not the US yen. The US yen didn't come into play because they had already played that trade, but this is a continuation. So in the meantime, let's go to the US CAD and see if there's any opportunity there. The US CAD has been really, really active in the mornings. Now here we don't see power dots. Why? It's saying that it's trading around power dots. You know what? It might. Never, if it announces it in the market analyzer, do not take it for granted. That means that historically here, there are power dots somewhere. And so, what you want to do sometimes, if you don't see any, then basically draw an extended line. This is for those of you that have the software. Do this, draw an extended line, change the color so that you can see it better, and then do this, go back in history, see where it has to come out. There has to be, that line will reappear again. Be patient. Patience is a virtue. I know that many of you do not have it. I certainly don't, but I've learned to develop it. And no, I did not see any there. Ooh, that's interesting. So that thing has to have formed from one historical one, which I missed, or there is a dot here, right here. See the trend dots right here? This is the one that they're trading off of. Not really a support or resistance, but what I call a mid-range trade. Now, when they do such a thing, and they do that very commonly, that's what I call a unicorn. And you better pay attention to that unicorn, because if you don't, you're going to miss out. Now, this means that if it moves up, it's really going to move up. And they're going to trade away from the mean, as you can see. Now, if it comes down, they're not going to trade too far from it. So you got to know your play. So this is where they came down to 124.98. It's at 125.20. So they already be initiated to go long. Now from this point, it's very easy. Why? Because here we can analyze and say, where did they play it? Did they play our trade? The answer is yes. Let me show you the way. Candle number 1, candle number 2. And again, you're developing an eye for this. Never forget it. This is not something that you're going to learn right away. It's not going to happen that way. Now they went up, came down. As you can see, when they came down, they didn't do anything. So now it's to the upside, which is a bad, very strange thing. I don't like when that happens with the US CAD. But in this case, I guess they're going to bring crude down. And if they do so, well then, we should see this rally. Now, what is my risk? the My risk here is and should not be anything below this level, 125.18. So from 125.23 to 125.18, we're talking 5 pips. Less, not even 4 pips. But I'll give them 4 pips. That's as far as I'll go. Why am I saying that? Well, because since it's trading away from that unicorn, if it breaks it, then it has to come right all the way back up here to 125.58. And if we catch that trade, then it's not a bad trade. We're talking about a good 25 pips. Not bad. It isn't great, but it's not bad. The US yen trade has already begun to go in our direction. We're up 1 pip. This one should play, but again, I'm not willing to risk more than that. I'm very particular about that. And sometimes, the trade will go against me, and it is what it is. I'm not perfect, but I try to make the least of mistakes possible now because I'm able to understand what their mindset is. What is their mindset? Their mindset at this point is really to trade like a robot with instructions that must follow through. And when they do that, when they follow through with their narrative, if you want to call it that, because it's programmed. Remember, you're not trading against individuals now. You're trading against robots. So now we have to basically devise indicators that give us that edge. So now it's time to bring in the volume indicator. Now this is a granddaddy of them all. You've never seen this bad boy. And if you have, then it's only because you've been here. So give it a minute to load. And then I'm going to show you the magic. Now, for those of you that are new, what you're going to see here is completely different than anything that you've ever heard of before. Because we take every aspect of volume and analyze it. We analyze the taper through volume spread analysis, which is outdated the way everyone else does it. Volume price analysis, because we analyze price. We analyze the price levels where they are trading at, and we isolate the support resistance that the banks or market makers are actually using for the day and week. And how do we do that? Well, we have an algorithm that basically isolates them for us. We also analyze order flow and volume divergence. So we're basically covering all 4 aspects, but we do it one step at a time. Oh man, sorry to hear that. Have a good one, Marshall. So why is looking at volume important? And why is looking at our volume even more important? Well, it's not that it's more important, it's the information that you get. So currently we're here in this candle. So let's analyze this. Let's bring up the data box. Now here you're getting information as it's coming in live. You can see the orders coming in, you can see them here, and you can see them here, the buy, the sell, and the net. Why is this important? Well, this candle right here is a bad boy. And you can see we finally went positive on it, or we're about to. So this candle, previous candle, had 100,000 on the buy, 600,000 on the sell, difference of 500K negative. So this is a bullish candle with negative volume. That cannot exist, but it does. This candle had 136 million on the buy, 186 million on the sell. There was 50 million. It's bearish. So yes, but what happened? Why didn't they break through the floor? That's the first question that must be addressed. With all that high frequency volume, why didn't they continue? This candle had 203 million on the buy, 163 on the sell. Again, a lot of high frequency. Why didn't it go up? And then finally, this candle, 106 million on the buy, 94 on the sell, difference of 13 million, but didn't do the deed, and it traded right below number one, the trend stop. Number two, the moving averages are coming down, which doesn't mean I'm trading moving average cross. I'm not. This signifies nothing because they're using it as a mean. So if I'm right, because they've overextended themselves for the day to the downside away from the mean, then they must trade right back to the mean. That's usually the case. So in this case, what the 200 and the 100 are doing are basically isolating that price level where they're trading right smack in the middle. So if we are right about this, then basically let us do this. If this is the mean, let's say they're using the 100, which looks like they are, then basically this is your mean. So what do we do here? We basically give it a color that they're going to use and that we're going to use significantly. And it's going to stick right in your eyes. And I want it to shine right in your eyes. Why? Because this is where it should come back to. Forget about the fact that the moving averages are moving back and forth. That means nothing. What we're looking for is information, why they're doing it. This announced that they were going to go long. And normally what they'll do is that they'll come up and they'll come right back down below the level. And if they execute one more time to the upside, then this is your trade. It's a 1, 2, 3 step. It's very simple. You got to know what you're looking for. But more importantly is that I'm going to show you a little trick. See this right here? This is what I was looking for. It's called volume divergence. Why? Because they threw the kitchen sink at this, a lot of high frequency, and then this settled up here, higher, and then of course we have this, which is basically coming up. So now from our entry, we are up from 125.23, 125.29, 6 pips. Not bad, but like I told you, it may be time to exit in some of these indexes. This is going to run. But I'm afraid that, for instance, if we take a look at the NASDAQ, and I got into the NASDAQ, is that it may be time to exit the trade. So hold on a second. Ooh, this is interesting. Okay, so this is a reaction to the news. Let's see what these maniacs brought out. Let's clip it here. Okay, so this is based on Canadian PMI, a reaction to it. We still don't have US PMI. So we're waiting for this. Now, this is important. Pay attention. Never want. If you see that they're going to hit a trade against you, then basically get out. Don't wait for them to take what you've already taken from them. That's a no-no. So because they did that, we have to go look at the Dow and the S&P just the same. Now we're going to analyze what we have shorted. And I told you, that when I was in those trades that maybe it was time to get out because it looked like it could reverse. Now, being that the case, we're going to take a look at that real briefly. And I think that usually the Dow is the best one to really look at it. Now a reaction like that is very aggressive. So normally it means it'll come back. I just don't like to give what I've taken from them. Once I'm in the green, I like to stay green. Give it a minute. It'll be right out. Gotta give it a minute. Usually takes its sweet time. And it's the volume indicator. Just takes up a lot of data. But believe me when I tell you, it's worth it. Okay, see how they hit it and they came right back? Because they didn't come all the way down and they're going right back. I should have stayed in that NASDAQ trade. I just didn't like it. This is what I was looking for. Now, if they do this here on a 10-minute right now, and this thing goes all the way up, then guess what? We have a re-entry. And that means basically just kicking them right between the teeth. And it looks like that's what's going to happen, because that means that you have an entry to go long, because that means they're going to trade again away from the mean, and that being this one and this one, but they hit it right on the money. So I actually feel very comfortable with this trade right now. And you have volume divergence. I wish we would have seen it live, but unfortunately it is what it is. So if you wanted to get to add another position, this would be the moment to add another one and go long if you weren't already in it. Let's take a look at the Dow now, because now it's time to go and add another position to the Dow. Now, normally when I don't like to manage more than one trade that I'm in. So in this case, I'd rather just take what's on the table here and then concentrate on the next one, which I think would be the Dow. The Dow to me is a much more conservative trade than the S&P and the NASDAQ. S&P and NASDAQ are a little violent sometimes, especially the NASDAQ. We're still in that cat though. That cat, see, look at that, beautiful. Yep, there's your entry. Right back up. More importantly is, see how they're going to break above this pivot? Because they came down, retested. This is high frequency at its best. Actually, it's not high frequency, which is really disturbing. Oh, I gotta laugh. I'm sorry. I usually laugh at these things because they use very little volume. They're despicable when they do such things. This one had all the high frequency. Look at that, 376 mil on the buy, 482 mil on the sell, difference of 106, which was negative, but did nothing. However, this one popped. Now, when they did this was the trade to the downside right here. Okay, and we looked at it, and I was concerned when I saw it. It's like, God, are they going to pull it, really? But I wasn't sold on it quite yet. So when that happened, they did come down, no question about it. But now it's time to go up. So now I can create, in good conscience, say that this thing is going to continue. So I can add another position because I'm already ahead of the game. And this type of trade is usually, is one that is not questionable, but sort of like a gift. Now, I'm going to watch this right here because I don't like the way the point of controls have set themselves up here. It's sort of concerning, but it's okay. I'm willing to, to wait on it. I think that this is one of those trades which will continue in that direction. It looks good to me. I'd say we have another 2 candles besides this one to the upside. So it's just a matter of waiting for it. Now, again, you see how they came back to the mean? They're using these moving averages as a mean. Nothing more, nothing less. Now, why did I like the way this traded? Because it came right back, and our indicator, the trend stop, which keeps us in the trend, basically was used as well. So everything's in correlation with one another. But more importantly, this is not an inside, it's an inside candle, but look at how much volume they've thrown at the sucker. I mean, they've thrown the kitchen sink at this. This is where looking at volume makes sense. Look at the volume on this: 775, 788 on the buy, 676, 112, 108. Now, this is where looking at volume is significant, because you want to see how price action reacts to the volume coming into the market. It's important. You need to pay attention to this. Because this is where the chess game really begins. This is where cryptanalysis really exists. See, what we've done with this volume indicator is that we're able to separate the buy and sell orders as they're coming in. Now, and we're doing it on the live edge, which is important. But what is important about this is that we're able to see the reaction behind the candle to the volume or order flow as it's coming in. Doesn't necessarily mean, remember, if the candle moves, then you have liquidity. If it doesn't, then you don't. But you still have volume. So don't confuse one with the other, because you will lose. Now, this is important because this trade, the way it's currently trading, like I said, if it settles the way it does, that means since they announced it here and here, that means that they could bring it right back down, which I don't really like the thought, but this one tells me that they still will play to the upside. So this is just a retest to shake people off. And they like to do this. They like to shake people off trades. It's a very despicable thing that they do, but that's okay. Now, crude basically came down, and we have the CAD going up. Now, the CAD hasn't popped the way it should have, but, we're up 10 pips, 11 pips on it. No, maybe a little bit. No, 10 pips. Yeah, we're up 10 pips on that. So, being that said and done, I don't want to leave and go to that one quite yet. I want to stay on this one. I want to see the reaction behind this. This isn't over. It still has another 6 minutes. However, I would have expected a much more drastic reaction right by now. And when I don't have those drastic reactions, that means that they're not going to play. So it could come down, retest. I'll wait for it. Like I said, I'm not in a hurry to step off. But I won't give up what I already have. So why are these pivots important here more than the moving averages? Because these are price levels that basically the software maps out that they have to go to. Now, if it breaks below this price level, then I have to be concerned, because then the next pivot is here. But if it doesn't, and it bounces right above it or maintains itself right above it, then it should go back up normally. But you can see they just broke below it. So at this point, we'll see how they trade. But more likely, yep, I'm going to get out. That was a crying shame. I hate when they do that. It is what it is. I had to exit. It doesn't mean that it's not going to go back up. They could have come back and retested the mean, and they will do that once in a while. But in this case, the news must have not been that great, because this is reacting to what should have come out here. So if it's negative, then that's the first. No, it came in as expected. That's not good. What the hell is their problem? Well, usually they won't go. So that means that if it came down all this way, and that's a big drop, some 17.744, 17.708 in one candle, that's huge. That means that it's going to continue but where will it continue to? Because this is a very drastic drop, and normally I won't trade these to the downside like this. I'll wait on it. I think the safer bet in this case, because see, I don't find a trade here. It doesn't make sense to me, and when I don't find a trade, I leave it. I come back to it. Don't worry. They'll give us another chance to come back to this trade. In the meantime, now I need to analyze the US yen, because the US yen will usually follow suit with the Dow, usually. Now today we have another problem. Puerto Rico could default, and that's why you have the governor of Puerto Rico on Bloomberg right now speaking, or this was yesterday. Now if they default, then yes, that's going to cause a ripple in the economy here and in the stock markets. I don't care what anyone says. Let's look at the yen, and then we'll go back to the US CAD, because the US CAD we're up 20 pips. Give it a minute. We're almost there. I know it's frustrating. Believe me. Okay. This is what I wanted to see. Now, see how they did that here, how they played this trade here twice? This is telling me that it's not going to trade in the direction of the Dow, which is rare. Usually, they don't break that correlation. I'm actually shocked, because this thing should be crashing along with the Dow. So they must know something that we don't. And if that is the case, then this thing should rally and come right back up here. If it does, then the Dow will follow suit afterwards. Usually there will be one leader between them. It will either be the yen or it will be the Dow. So in this case, I'm comfortable with this. We'll wait on it. I'm not comfortable with the fact that they had a lot of volume in this previous candle and that nothing happened. Look at it. This one had 216 million on the buy, 156 million on the sell. 60 million bullish volume in a bearish candle. That tells you a lot. That tells you that the next candle should be bullish, and that's what we have here. So we're going to let this trade play, and now it's time to go to the US CAD. Because in the US CAD, we're already positive on that one. We were up 20 pips. Now we're up, I think it's like 14 or something, or 12. Give me a minute. I'll be right back. Okay. What? There. Now, here we have a problem. What is our problem? They went right back to the mean, which we knew they would. We still have volume divergence here. Let us expand this. As you can see, it initiated here. It's still settling bullish. So now what I'm expecting of this is that it comes all the way back up here. Now, what's my problem? Pay attention. Came right back to the open. See, it opened here, but it came right back to the initial trade at the very beginning. That's why I told you this gold line is something that needs to stand out in your mind. And if it doesn't, then you have a very serious issue that you need to resolve, which is lack of information that you don't have, and maybe, just maybe, you need to be using my software to trade. So right now we got in at 125.23. We're trading right now 125.37. Not bad. Like I said, I think this one still has room, but I don't like the fact that they hit this level. Now, usually, this is what will happen. They'll usually make a move, a 20-pip move, then they'll come back, halt, chop, 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 range, and then continue. So if that is the case, then we're going to watch this trade around this level and certainly nothing below this level, 25.29. I think they're going to trade around this pivot, 125.34. If that's the case and they hold it there, then that means that they're going to rally right back up from it. So this is important because it basically puts us in a quandary. Do we take what's on the table or do we wait? Now in the US session, they've made this very serious mistake that when they do such a thing, they are basically trying to get people out. And so again, you have to make that decision. Do you stay or do you go? I can't make that decision for you. Because if you've already made 20 pips, 30 pips in a trade, then it may be time for you to take what's on the table and get out. But if you're willing to put their algorithms to the test, the way I am, once they go directional, then at this point, you're going to have to go to the higher time frames. And if I'm right, the higher time frame will give us the signal that this will continue for the next hour or two. And if that is the case, then just maybe we've done the impossible, which no one else out there has. What is that? Giving you assurances that this trade is going to a whole other level. So let's remove the volume indicator because it's going to slow us down and I'm tired of being slow. Any questions? Like I said, what we do here is completely outside the box. See, look at that miserable Dow. Bounced right back up. I hate when they do that. Let's give it a minute. Okay. I don't like the fact that they use this and that they use the mean and the reversing, but this candle will be very significant to me in the way it settles. If it settles up from here, that means it's continuing. So in the meantime, it has 5 more minutes. Now, if your question is why am I not using a 5-minute? Because these conniving, despicable, misleading programmers are not trading off the 5-minute. They're using the 10, 15, and including the 7 minutes. So give it a minute. We're almost there, boys and girls. Almost. See? What do we have here? Number one, we have a power dot, which is important. That is very important. So what we're going to do here is we're going to outline that bad boy. When a power dot forms, it means that a support level is also being established. So in this case, we want to be sure that that is the case. Now, when they came down, they did play that trade, and they played it right off of here, and they played it right off of this pivot here. What did they do here? Right off this level, they went up, which is what I'm expecting them to do, is to come right back up. I'm expecting them to come up to 125.51. That's my expectation. So in this case, I have to take that into consideration, and now I may want to use a 7-minute to confirm my findings. And again, we're waiting for them to do this. Remember, they're going to play this little game, and we want them to play this little game. But now they formed a power dot here. And so I have to take that into consideration. You have a higher time frame here, but you have a lower time frame bouncing off of the mean, which is just as important. So if we have this here, in the immediate side, we look at how it's reacting on the short term. Can we rely on the long term to stay in the trade? I knew that once they did this, they would come back and chop. So here, I'm not willing to give what I've already made, but I'm willing to wait and see how they trade here. I know this is their range. If they maintain themselves around here and don't go below any further, then I would consider staying. But if not, then I have to consider exiting. Why? Because that means that maybe their agenda is no longer to go back. And I'm okay with that. Understanding what they're doing and how they're doing it is important. This is what trading is all about. Managing your risk. Don't care about their risk. They don't care about yours. Manage yours. Once you're in a trade, if you are already positive, do you stay or do you go? Because right now, most of the trades in the morning sometimes give you 20, 30 pips, and that's it. Sometimes they don't give you anything more than that. Sometimes they give you 50, 60, depending on what you're doing and where you're heading and how the market is reacting to it. So in this case, do you have to basically wait and see? Yeah, the answer is yes. You most definitely have to wait and see. Now, if they come back and play this trade, which should close very soon, if it closes above and you see the point of controls like this, so long as it closes above, remember, this pivot was very significant to us. There was one more here, but then this one formed here. So depending on how this thing closes, that's basically how we're going to define whether we stay or whether we go. And they're going to play a lot of chop, chop, chop. They're going to chop, 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 because they want to trick you. They want to make you believe that they're going to go short. This is, their algorithms basically are now designed to make you react from fear of loss. Very hard statement to make. Now, if you're able to overcome that and master that emotion, which is very hard when you're trading, once you're in a trade and you're positive, then basically at that point, if you can't master your fear, then take what's on the table. Take 10, 15 pips, get out. We're up almost 10 pips right now. We were originally up 20 pips. I believe that this thing has the potential to continue to go further. I'm willing to wait and put it to the test, only because I understand how their algorithms are currently programmed right now to basically test your emotions. Again, a hard statement to make, not one that is very easily acceptable, because it's not. I find their methodology very despicable, very unfair, and very deceptive. But we've cracked their code. And since we've cracked their code in many, many cases, then I don't believe that we are in bad company. Far from it. Now, would they come and retest? Yes. Remember, this is telling us long in the morning. A power dot that formed here is telling us long. I like the higher time frame more than the short time frame. However, I will see how the short time frame reacts, because that means that now I'm in a range that I may not like. And so at this point, this candle basically tells me they're going to go long. What is this? This is the mean. What is this? This means that this is not a real support or resistance level. And I must address that mentally and emotionally, because what they do is basically try and scare the living daylights out of you. Again, they don't want you to win. You are their adversary, and never forget it. So the question is, do we stay or do we go? I say we stay. I say we put them to the test. Why? Because I feel that we probably have another 1 or 2 more candles to go up. And if I'm right, they will come up here to 125.55, 125.60. Are you willing to give up those pips? Or are you satisfied with making, 12, 15 pips in a trade? That's a question that only you can answer. I cannot answer that for you. Now, normally what I recommend people to do is, when they are trading, is at the beginning, just watch the bloody market. Don't trade it. Just watch it. Define your strategy and see and ask yourself, would you have taken that trade? And if so, why? And write it down. Trading is about documenting every step that you take. It has to make sense, because if it doesn't, you got nothing. This thing will continue, and I don't have any doubts in my mind. But now I need to go look at that yen trade, because it's down 10 pips, and I told you I don't give up more than 10 pips in a trade, and I won't. If I don't see it go in my favor, then I need to see a reason why I would stay. And if I don't have a reason why I would stay, then I get out. We still haven't had a loss today. We're still positive for the day. We've had 2 break-even moments, but we're still positive for the day. So now we're here. What did they do? They came down, did the same trade at a higher level right off the trend stop. We should see this continue to go up. That is the intent. Again, what did they play? The moving averages, right? Smack to the mean. But the question is, will they continue? This is what we don't have an answer to. I'd like to have an answer to this, but I don't. And because I don't, sometimes it's better to walk away from a trade, reassess, and then get back in. Don't let your emotions get caught up in it, because what will happen is that you will lose more. Sometimes it's better just lose and not lose more. It's a very difficult thing to go through. Make no mistake, even I have had trouble developing that trait. As traders, I think the most difficult things for us to control is our emotions, especially once we are in a trade. And I say this because we're human. But I believe that what we've done so far right now is that by identifying some of these trades, we've taken emotion away from the decision process, because we're not in saying, oh, you gotta go, come on, gotta go. No, we know there's a specific pattern that we're looking for in a trade, and if we see it, then we take it, and if not, then we don't. I love this trade to the upside. Believe me when I tell you. I told you that when they did this, they were doing it to trick us and get us out. But at the end, they were going to rally. So now we are up, let me see, we're almost at 30 pips. I can live with that concept. question. Look, they hit the pivot right smack on the money. Now they pulled back down. Now again, we have this love-hate relationship with them, but we know that this is not a real support level, nor is it a real resistance level. It's one of those that doesn't mean anything, but I don't like this. When I see the point of control of the buyers below the sellers, it bothers me, especially because they can use this as a resistance level, and they're using this as a resistance level before coming down. But we know their agenda. Their agenda is to chop, discourage, and get you out. I'd say we stay just a little longer before we exit. I mean, right now we're up practically almost 20 pips. Now, we could go and we could exit the trade and then go look for another one and see if we find another one. Or once you're in it, you play it, you stay with it, and you see where it goes. We're 2 pips away from 20 pips. They're trading right at the mean. I don't like this. It bothers me the way that they're setting this up. At least the point of controls have changed, but I need price action to really make a move to the upside. Again, we have 1 hour power dots right here telling us long. I'll go with this any day over this, but I need to see the reaction with it. If I see that it forms in the 1 hour, it means I have an hour for this trade to evolve. I'll be right back. Okay, so now we're at 20 pips. Will it continue? I say it goes back up and retests this level one more time. If it doesn't break it, then there's no need to stay any further, and we're out. Or we can do the conservative thing and say, you know what, I think that I don't want to risk what I already have on the table, and I'd rather take what's on the table now than continue to give up what I already have. Sometimes it's better to take it. This trade was really just 25, was not really meant to be a big trade. You know that, right? Maybe 30, 40 pips. If we take 20 out of a 30, 40 pip trade, I think we did pretty good. The fact that we identified the pattern that they're using to execute these trades is very important. At least to me it is. It should be to you. So let's go to a 10-minute and let's go see if we find something else. If we don't, then we're more or less done. In the meantime, I'm going to put my email here for you to make a note of. And if you have any questions, email me. Or if you wish to call me, you're free to do so. I'm not a scary person. I will answer your questions. So see, this is a 10-minute. And you see how basically they have the same power dots here? Well, to me it's disturbing that they came up, pulled back down, closed right below it. It tells me that it's time to go short. So in this case, maybe going short might not be a bad idea. It's not that we haven't caught trades this way. They're trading, closing right below the mean. What is my risk? I'm not willing to risk more than 4 pips in this case from my entry. That's as far as I go. And if it plays, then I may pick up a few more pips. That's the wonderful thing about the US CAD, is that it has been giving some really unique trades lately. And again, I may not be interested in getting a whole lot, because I'm not, to be quite honest with you. But 10 pips, if I pick up another 10 pips, I'm not upset about it. If I pick up 5 pips, I'm not upset about it. It's understanding the trade. That is what I want you to come to terms with. Understanding what you're looking at. Understanding if there is an opportunity, and if there is, why. Why is this an opportunity? They've power dots formed right above the moving averages, which they're using as a mean. Granted, it didn't go any further on the 1 hour, but it could come down from this point. And so basically this becomes a high probability trade. Am I interested in a high probability trade? The answer is yes. If I don't see it play out more, see how this pivot is significant, I need it to break below this pivot. If not, then I need to exit. And it seems like they're attempting but failing at it. So if they don't break it in this next attempt, which I think they will do one more time, then at that point, it's time for me to get out. But again, I'm not willing to risk more than 4 pips. I know what this trade could potentially do, but I know that if I'm wrong, then I'm wrong for very little. And that's something that you have to, if you're going to trade reversals, then you have to understand what they're doing when they're doing it. The only reason why I even got into this is because they traded right off the mean, pulled right back down. This one, if this one pulls below this, which it looks like, and I think it will, then at that point, I may be interested. But again, it may not be a big trade. Understand what you're getting into. That's the significance about trading. Now, if you know that a trade is not going to give you a lot, then don't take it. Bottom line is sometimes it's better not to do anything and just wait than to get caught in the emotion and take something that isn't going to work. So in this case, I'm only going to give it this candle. If this candle doesn't play, then I'm out. This candle has 6 more minutes. And in those 6 minutes, I need to see proof. If I don't see proof, I usually like to see it within the first 5 minutes out of a 10-minute candle. But under the circumstances, I think it may be one that I would give it a little bit of wiggle room. See, I don't like what they're doing here. It bugs me. Let's see. You're holding for a reason. Why are you holding? Yeah, see, I'm not willing to give up any more than that. That's as far as I go. Like I said, sometimes you got no one to walk away from a trade. Otherwise, it'll bite you. Oh, let's see. I was just about to close. No. Nope. That's as far as I go. See, again, that 1 hour issue, they chop you to death and they go back in the direction. It bugs me. I hate to say it, but, sometimes they'll play that trade too often. I wouldn't be surprised if it comes up here, but it's the way that they trade it that is very, very deceptive. And so sometimes, unless you've got the patience for it and the belief that it will go up, like I said, you may want to take what's on the table and not give anything back. Or you may want to just move on. Let's take a look at the Dow real quickly. I want to see where that's at. Son of a gun, that came right back up. God, I hate these guys. See, look at that. Despicable. I wasn't wrong about the direction. It was the way that they reacted. And I got out, and I think I may have got out minus 1 tick, which is nothing. But again, we're not negative for the day. I could have gotten out with 40 or 50 ticks on this thing, and then it just came right back. Now, being that said and done, that means that the US yen probably rallied as well. But I wasn't too sure about that one. So that's why I exited. So let's take a look at that. Yeah, see, it popped. Not a big move, okay? Let's be honest about this. We were in here, this would be a 20 pip move. Not a big move. Not the way that the Dow has reacted. I would have expected a lot more from this trade. And it didn't give, so somewhat disappointing in that regard. Let's see that Euro Swiss. This one's one of those tricky pairs that once it alerts you, you sort of need to pay attention to it. Now, when it says analyze me, it means that there are power dots where it's trading. When it says trade with me, it means that it's in between power dots and the trend stop, which is a very strong congestion level. So that means that there could be a breakout opportunity. I don't do breakouts. That's not what I trade. It's not our style. That's not what we look for. But we do look for a specific pattern. And it looks like they're going to play that pattern. Here is the pattern that we look for in the candle. At a specific support level, they will play this. And we need to look to see how many times they've played it at this level. They did it here. They've done it here, and it looks like they're going to do it here. Now, if I'm right, it is at a support level. They haven't broken it. They're trading right off the mean. Again, they're using these moving averages as a mean. So we're not looking for a moving average cross. That's not what we trade. And in this case, it may be interesting to bring the volume indicator back into the game, which is going to take about a minute, so bear with. While it populates, I'll be right back. Okay, so let's take a look at this. Did they do this? Yes. Is it going along? Yes, it is. Where did this come from? Which is what I'm trying to figure out. R1. That's interesting. Now, what's my risk? If I entered here at 109.98, my risk really is 4 pips, 5. That's it. Hopefully, what you're seeing here makes a lot of sense. And again, it's, trading has to be systematic, logical, and rational. If it isn't, then you don't have enough information to take a trade. For me, it's logical, systematic, and rational. Why? Because this is a power dot formation right around the moving averages, which they're using as a mean. They've already come back and retested it. As you can see, the time that they've come and hit this level, they have failed to break below it. So that means that something's up. 1. Number 2 is that if I go this way, then what is this? Support 1, resistance 1. Where did this come from? And why is it here in my indicators? Oh, daily pivots. That's why I don't use this. That's why I was like, what in the... That makes no sense to me why it came up. I'm not looking for the daily pivots. 1 second. Okay. So, we had, as you can see, the open was here, went up, came down. They used the 50, they came down, used the 100, went back up, came back down. They haven't hit the 200 because they haven't had a need, so they're using the 100 and the 50 as the mean. So that means that what comes down must go up because it was already going up. Now they've already gone up. So in this case, I have to really take into consideration, are they really planning to go back up, or is this candle going to come up, retest a trend dot as it's coming down, and then use it as a resistance level before coming back down? That's a question that must be addressed. And if I can't see it and don't understand it, then I can't trade it. And if I can't trade it and really reason with it, then sometimes it's better for me to step out of the trade, even though I'm in it. Losing 1 pip or being at break even is nothing in comparison to having peace of mind. I'd rather be at break even, not make anything, than risk without properly understanding what the trade could actually be here. I didn't have enough information, so I had to basically exit. Did I lose anything? Nothing. Do I understand what I'm doing? Yes, and that is what I expect from you. To understand what you're doing every time you take a trade. To understand and expect a reaction from the trade that you get into. And if you don't have a reaction, then you don't have a trade. And that's basically what trading is all about. So we're basically at our end. So unless you have any questions, I want to thank you very much for joining us here at Phoenix Trading Strategies. It has been a pleasure working with you. Let me put my contact information again. Ricardo at Phoenix Trading Strategies.com. If you have any questions, email me. If you're interested in learning more about the software, email me. I'm doing a write-up of the theory, and I'm going to do a video actually. And for those of you that have the software, I will be providing it to you. For those of you that don't have the software, you're going to end up paying for it. Sorry. There's only certain things that I'm willing to give away for free, and my knowledge is not one of them. Oh, no worries, Peter. No worries. I'm glad that you could join us. It's obvious that you're interested. So feel free to send me an email, and maybe we can talk through Skype. Let me put down my Skype here just in case. For those of you that are long distance, my Skype is typing as we speak. There it is. There's my Skype. You should have it in the chat. So I want to thank you very much for joining us today here at Phoenix Trading Strategies. I look forward to seeing you. Those of you that are signed up for the European session that have the software, I will see you Thursday morning from 2 a.m. Eastern to 4 a.m. Eastern. We will trade live. And then everyone else, I will see you guys Friday morning, same time, same place, 9 a.m. Eastern. Have a great one. Have a great week. Happy trading. Bye-bye now.